Good morning, ladies and gentlemen, and welcome to the Horizonte Minerals PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it's appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Jeremy Martin, but perhaps before doing so, if I may just play you a short video.
Good morning, and very pleased to be here to provide a Q4 operational update for Horizonte. So I'm going to run through some key areas today. You can see here on the agenda. I think the first area to discuss is really talking around the nickel market. Obviously, if we look back across the last 12 months, we've had some very interesting price movements. We talked in our last update about obviously the significant run up on the LME in Q1 into Q2. But I think what's important is where nickel prices have ended as we move into sort of the last part of this year. We've seen a fairly sharp kick up in pricing, which you can see there on the graph, and that's really a function of a number of factors. We've seen some disruptions at a number of key operations. We've had Goro. We've had fire at Nickel West. We've also had low liquidity in the nickel exchanges since that large run up earlier in the year. And the big driver is that battery demand is still very strong. 2.4 million tons of new nickel needed by 2040. We're seeing next year into 23, 30% year-on-year growth. And we're seeing very positive and supportive EV policies across a number of countries. We're seeing the build out of charging infrastructure, and we're seeing battery cost optimized. So overall, it's a very positive picture. And I think in terms of pricing, we just have to always reflect on what we've used as our base case pricing. And in our financial model for lenders, we've been using a nickel price of $15,000 a ton versus a nickel price in the market today of around $29,000 a ton. So it just shows you how robust Araguaia is. And obviously, a lot of you are aware of the story, but I'm hoping we have some new listeners here today, and really just to refresh what our business model is. We are 100% focused in Brazil. We've got 2 tier 1 nickel assets. We've got the Araguaia ferronickel project, which you've just seen the video on. It's a discovery that we made. We then consolidated with acquisitions from Teck and Glencore. We raised $630 million in December last year. And now we're in construction, aiming to produce first nickel in Q1 24. And then our second asset is the Vermelho nickel cobalt project. That's currently in feasibility stage. That's designed to produce 24,000 tons of nickel and around 1,200 tons of cobalt. And the key driver between these two projects, they're within trucking distance of each other. And between Araguaia and Vermelho, we have the resource base to build out 60,000 tons of annual nickel production, which would be a meaningful global producer. We're going to be a leader in terms of our ESG credentials with some of the lowest CO2 per ton of nickel in the market. We've got a strong team, and we've got the ability within the district that we operate to build out that resource base further. This map just shows that region in Brazil. We're up in northeastern Brazil. The top sort of right-hand corner on the map where you see the Horizonte logo is the ocean. You can see the Araguaia belt shown to the bottom of the slide. Araguaia South, which was our discovery, where we're building the operation today. Araguaia North, where we acquired the assets from Glencore. And then Vermelho, about 120 kilometers from Araguaia North, we acquired from Vale. And you can just see there on the left-hand side the footprints and the scale of operation that each of those majors was going to build out these projects at. So these are all within trucking distance. We own 100% of the assets. We've got very good infrastructure. You can see there the yellow routes are tarred highways to the ports. We're going to be using the existing port of Vila do Conde to export our nickel and bring in inbound consumables. And another key driver is, you can see there 2 very significant hydroelectric dams. We have renewable power contracts, which we'll talk about later in the presentation. But this is a core mining region. Carajás is to the center of that slide, where Vale have their large iron ore operations. This really is a fantastic place to be developing a new mine. This slide, some of you will have seen before. It really just shows our build out of annual nickel production over time. On the left-hand side, you can see Araguaia Line 1, which we're currently building, and will produce around 14,500 tons of nickel. The second line on Araguaia will double capacity there. And then you see Vermelho coming online with sort of 35,000 tons of nickel equivalent, which takes us over that 60,000 tons of annual production. And you can see outside of the key Chinese producers where that sits us globally. So our plan is to deliver on those milestones, and then we will look forward to see how we can build that capacity out beyond that 60,000 tons of annual production. Just a reflection on the feasibility study economics at Araguaia. You can see here, based around a nickel price of $23,000 a ton, upfront capex, short payback, IRR of over 40%. And a key driver is that C1 cash cost sub $7,000 a ton. And to put that into context, the cost of Indonesian nickel today is somewhere around $13,000 a ton. So we will be in the lower quartile for costs. And you can see the NPV there at that nickel price of around $1.5 billion. If we look at today's nickel price, we've just taken $28,000 a ton there. Araguaia Line 1, the NPV is over $2 billion. So this is a highly competitive, low-cost project that we're developing here. So I wanted to just take a bit of time to really reflect on what's been achieved in the last 12 months, because it has been a pretty transformational time for the business. And this just shows the sort of timeline of what's been achieved this year. So if we go back to January, we approved the project in late January after closing the financing, the equity piece in December. In March, we closed the debt facility of 340 million. Q1 was all about the award of the long lead items, the furnace, the rotary kiln. It was moving from basic engineering to detailed engineering. It was about building out our owners team. In May, we mobilized the site with the award of the earthworks contract to Copper, and we broke ground in May. And then as we moved from May through August, October, you can see there the award of the civils contract also to Copper. We awarded the power line contracts. We improved all of the infrastructure in and out of site. That included upgrading 42 kilometers of road, bringing supplementary power to site. In October, we awarded the feasibility study contract for Vermelho. We also raised an additional $80 million of financing to cover that cost to complete test with the lenders. In November, a key milestone was the award of that long-term power contract. And we were very pleased about this. We were able to negotiate some extremely competitive renewable pricing. The average pricing for the sort of 10-year contract was around $29 per megawatt. And that was around 30% lower than the assumptions that we used in the feasibility study. And based around the inflation that we've seen globally over the last 24 months, that really is a great outcome in terms of what this means for the operational phase of the project. In November, we awarded the electromechanical contract to the MEEP Millplan group. That will obviously drive all of the electromechanical erection. We'll start to see steel work going up. In December, a really significant milestone was the first draw on the bank debt facility. That was a significant amount of work. Obviously, all of those power port contracts feed into those conditions precedent that we had to satisfy. Another really important statistic is we've worked 990,000 hours with no lost time injuries. So that's a big driver and shows the quality of what our team are doing on site to ensure that all the teams are safely operating on site. And look, site is busy today. We've got around 1,800 people across the project. Our owners team is around 130 people. If you look back in January, it was around 30 people. So we've done a huge amount in terms of the team build out. And as we end this year, the Araguaia project is 28% complete. It's on schedule and it's on budget. So we are very pleased with where we've ended this year. What I would like to do now is really just take you through that journey in some photos and kind of highlight what work has been done. So this is a photo of the site in January, and you can see it really was a greenfield site. And you can just see there the kind of key positions of some of the key infrastructure pieces, the primary crusher, rotary kiln, electric arc furnace. So that was January. We look at the site in November. And if you look at the same areas, you can see a massive step up in activity. And I'm going to take you through each of these key infrastructure pieces and just sort of talk through the work on those. So before we do that, this is the 3D model that we're working from. The whole construction process is actually built out in 4D. So everything is taken from the model. It goes to the various manufacturers and everything is designed and then fabricated from the 4D model. And you can just see the key areas on the flow sheet there. If we look at it on the ground, the electric arc furnace is really the heart of the operation. This is the main long lead package. This is supplied by Hatch, who is the global leader in furnace technology. All of the earthworks are complete on the electric arc furnace. You can see there in the center of that photo, that circular section on the concrete pad. That's an 18-meter diameter reinforced foundation. And that is where the electric arc furnace will sit. And then around the edge of that are all the concrete anchor points where the steel work for the furnace building will be built on. And you saw that in the video at the start of the presentation. To the left of that image is the calcine transfer foundations, having all of the formwork built out. And this has been a major part of the project, and we're about to mount the furnace base plate on that foundation in the coming weeks. This is the primary crusher. The primary crusher wall there is complete. That crusher pad has been built up. It will now be contoured. It'll have hydro seeding to stabilize those contoured walls. There will be a concrete reinforced base built into that retaining wall, and that is where the primary crusher will sit, or will be trucked from the Picker Zero pit that you can see in the sort of top left-hand corner of the image. It will be trucked up to the primary crusher, and that really starts the journey of the kind of conversion to produce ferronickel. This is the homogenization building. You can see the cord foundations there. This is where we blend the ore, and the next stage on that will be pouring the concrete foundations and the erection of the steel building to go on that homogenization pad. We've talked about some of the long lead items before. A key part of that is the furnace package. You can see here, this is the furnace base plate being aligned and welded. There were a number of sections that were delivered from South Africa mid-year. That is now welded, and that will be lifted onto that furnace foundation by the end of the year. That's a major milestone. Here we're looking at the rotary kiln. This has been fabricated in China, supplied by FLS, another leading global manufacturer of rotary kiln packages. Here you can see the main kiln drive rings, and then lower right-hand corner are the main bearings. They've all been shipped and they arrive on site in early Q1. And this shows another part of that journey. This is, you can see the bearings there, top left-hand corner, and the actual kiln shell. In each of our fabrication facilities, we have HORIZONTE appointed QA/QC inspectors and expediters. So every piece of equipment, before it's completed and before it's shipped, it's tested and inspected by our QA/QC expediters. So that means that we can ensure that when it arrives on site, it's to the quality and to the design that has been specified. And that's been a key part of this process. Here you can see the completed vibratory feeders and coal screens. Again, they're being shipped to site. So it's just showing the evolution of the packages from design, construction, and then arrival on site. Another key work area has been the main 125-kilometre long power line. I was actually down on site 2 weeks ago, and we went out and visited kilometre 50. The focus at the moment is the foundations, and then we've got tower construction going on. There's approximately 3 towers per kilometre of line, and we will see a tower erected per day. So it's a large piece of work. It's critical to obviously have this in place to power up the plant. We've got 4 work fronts running at the moment along the power line, and that is all running to schedule. So look, it's been a very successful year, but what can we look forward to in 2023? And you can see here some of the key milestones. Obviously, the delivery of the balance of long lead items to site, completion of the earthworks, completion of the detailed engineering in early Q1. The mining services award will go out in Q1, and that's key because we start to pre-strip in Q2 and start to build up the material in ROM piles that's then going to be processed through the plant as we move through ramp up. All material contracts will be complete by H1. And then the other exciting piece is we'll be awarding the feasibility study for line 2 at Araguaia. We've talked about this in the past, but this is a key driver we see in taking Araguaia from being a 14,000 tonne a year producer to a 29,000 tonne a year producer. So that's going to be another key development for next year. This is the project schedule, and as I said, what I'm very pleased about is we're ending the year on schedule, and you can see there as you move through Q1, Q2, Q3, Q4 this year, all of those milestones that we've talked about delivered on schedule, and then you can look forward through 23, and we aim to be cold commissioning in Q4 next year and producing first metal in Q1 24. So a number of major milestones to be delivered next year, but the site is well set up to deliver those. We've got a very good team on site. and I think it'll be exciting as we see those developments next year. So then moving on to Vermelho, obviously we've talked about Vermelho in the past. We see this as a major part of our value proposition. Vermelho is a very high-grade nickel cobalt resource. It's one of the highest grade undeveloped projects globally. We obviously acquired this asset from Vale. You can see here some of the key drivers. It's in a very good region in terms of infrastructure. There's a tarred highway a kilometre from the project. There's been over $300 million of historic investment on the project. It's going to produce intermediate grade product, nickel and cobalt, that will go straight into the battery market. And it's also going to have some very compelling ESG credentials. We are advanced on the feasibility study. You can see here, this is one of 2 drill rigs currently active on site. We are undertaking geotechnical drilling across the proposed plant site. We're collecting geometallurgical samples for an additional piloting campaign so that we've got new samples of battery grade intermediate nickel and cobalt that we can take out to offtake partners. We're also updating a number of the work streams that were undertaken by Vale in the original feasibility study, obviously working with Wood, our main engineering contractor there. And the other key deliverable this year is going to be the filing of the SEIA, which is the environmental impact assessment to allow us to advance the permitting around the asset. Again, looking at the economics on Vermelho, they're pretty compelling. If you take our base case nickel price, over $12 billion of free cash flow. A key driver again is that low C1 cash cost, and if you use today's nickel price, that NPV is around 3.9 billion. So this is a highly cash generative asset, which we see as being mine number 2 coming online when we've fully commissioned Araguaia. I think an important part to revisit is Horizonte today has a very strong group of shareholders, not only a strong following in the retail market, but we've also got, and we've built up over the last 12 months, some very good institutional shareholders, led by our 3 core strategic groups there, La Mancha with around 23% of the business, Glencore at just under 18% today. They've obviously got an offtake on line 1 at Araguaia, but you've seen they've increased their position during the course of the year, firstly by the acquisition of the Teck shareholding, and then strong participation in that raise in October. And then Orion Resource Partners, one of the largest private equity groups in the mining space today. Orion have got over $170 million invested in the business. So very strong support there. And then you've got a number of other institutional holders who have been building positions in the market, such as Helicon, Condire, and Asvalor. So I think that's an important driver. We end the year with our market cap just under $300 million. It's actually today where we've got up on that. We're around 350 million sterling. And we're starting to get research coverage across a number of larger groups. And you can see there, most recently, Bank of America initiated coverage on the business. So just to wrap up, really refocusing on that investment opportunity, we believe we're pretty unique in the marketplace. We have 2 tier 1 assets that we own 100% of in a mining jurisdiction. Araguaia is fully funded, taking us through to produce first nickel in 2024. Vermelho is fully funded to deliver a feasibility study in the next 12 to 16 months. And between these 2 projects, we've got the ability to produce 60,000 tons of low cost, high ESG quality product. We also are able to leverage off that existing infrastructure in the region around us. We've got the ability to grow our resource base, and there are very few of these assets in the market. So we're starting to see M&A in the mining space. Most recently, we've seen obviously BHP with Oz Minerals. And we know with the demand picture we're seeing on the nickel side, the scarcity factor of assets of this quality and this scale positions Horizonte extremely well for the future. So I'd like to thank everybody in the Horizonte team and all of our associated contractors for a very strong year this year, and look forward to keeping the market updated as we move into next year. Thank you very much.
Jeremy, Simon, that's great. And thank you very much indeed for your presentation this morning. If I may, what I'll do is I'll just bring back up your cameras. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Simon, Jeremy, we did receive a number of pre-submitted questions ahead of today's event. And as you can see there in the Q&A tab, we've also received a number of questions throughout your presentation this morning as well. So firstly, thank you to everyone for taking the time to submit their questions. And Jeremy, Simon, if I could just hand back to you to respond to those questions where it's appropriate to do so, and I'll pick up from you at the end. Thank you.
Yeah, no, perfect. Thank you very much. And yes, as you say, we've got a raft of questions to work through here. So if we start from the top, the first question is, can you refresh and remind us on the milestones for H1 23? Obviously, we covered those in the presentation, but just to run through those again, obviously it's the balance, the award and balance of long lead items on site, conclusion of earthworks, which will be early Q1 23, conclusion of the detailed engineering Q1 23, the award of the mining services contract, all material contracts awarded by end of H1, and the award of that feasibility study for line 2 at Araguaia. So there's going to be a lot going on in the first sort of couple of quarters of next year. Next question is, what is the largest remaining risk to achieving nameplate production in 24? Look, we, like any other construction project, are at risk from any of the key factors which are out there in the market. So I suppose the key drivers for us would be, and risks would be, productivity levels during this wet season. We're already nearly 8 weeks into the wet season. We have had some very wet weather, but we're able to maintain those productivity levels, which is good. But obviously, if we have significant rain in January, February, that is likely to affect productivity. Global supply chain risks are still in the market. That's i.e. ensuring that long lead items are delivered to site according to schedule. That's always a risk. And then it's really just managing contractor productivity through to that cold ramp up and first metal. The next question is, have you achieved your staff recruitment targets, and do you see any or foresee any risks in hiring enough people? As I said earlier, we're currently running about 1,800 people on site. We are ramping up very sharply during Q1 to hit peak labour across the project of about 3,000 people. So a big step up to come. But so far, our contractors working with our own team have been able to source and ensure that those ramp up of personnel have been effective and maintained schedule. Next question is, appreciating that Araguaia line 1 is of primary concern, but what point do you expect to be able to make a decision on the start of construction at line 2? So I'm going to hand that question to you, Simon.
Yeah, sure. Thank you. Obviously, we've got the feasibility study, which is going to be undertaken during 2023. Following the completion of that, we will have to go through the process of ramping up and successfully commissioning line 1 first. There are restrictions on what we can do with the senior debt facility. So assuming that nickel prices stay fairly strong, we envisage being able to move forward to finance that. And importantly, the plan will be to do that out of free cash flow in any kind of reasonable nickel price environment. Above sort of $16,000, $17,000, we should be able to do that. So the plan would be to do that as soon as ramp up is successful at line 1.
Yeah, I think that answered also part of the second question, which was, do you plan to fund line 2 out of cash flow? So obviously that is one of the options available to us, as well as potentially refinancing the debt package. So we've got options there. Another question is, can you talk about the grade of your nickel across the project? So if you look at the reserve at Araguaia, we've got 27 million tons, which grades around 1.7% nickel. And that allows us to run for 10 years at close to 2% nickel, which would be one of the higher grades of nickel projects globally. So I think to answer that provides 30 years of mine life at Araguaia. That obviously sits within a broader mineral resource measured and indicated of around 119 million tons at about 1.3% nickel. So again, it just shows the scope that we've got to continue running Araguaia for. And then if we move to Araguaia North, we've got a deposit there called Serra da Tapa, which we haven't included in any of our mine schedules yet. And that's got a measured and indicated resource of around 56 million tons at 1.3% nickel. So we've got significant scope to expand this operation through additional lines or extending mine life. Next question is, are there any new developments on Vermelho you can discuss with us? I think, look, we've given you an update today on the feasibility study. Obviously, the focus at the moment is all that data collection on the ground, the geotechnical work, the geometallurgical work, hydro, the filing of the new environmental impact assessment. Obviously, in parallel, there's engineering work underway with wood. And then corporately, obviously, we have had a number of inbound interests from OEM stroke battery manufacturers, which obviously we're evolving. But I think, look, the plan here is we're going to develop and build out a high quality feasibility study over the next 18 months for Vermelho. And we aim to deliver that with the kind of high economic returns that we saw in our PFS, but to an AAC Class 3 FS level. The next question here is, please can you provide a bit more colour on the debt drawdown and the CPs you had to complete in order to get to where you are today? And I'm going to give that to you, Simon.
Yeah, thanks. So the debt process over the last sort of year has been to reduce the risk for the senior lenders. So a lot of the announcements that you've seen that have been made over the last year have moved us forwards with the satisfaction of the CPs. Right at the beginning of the financing of one of the main CPs was to have a creditworthy off-taker in place for the full duration of the senior facility. So we successfully brought Glencore on for the marketing arrangement. In addition, they wanted sort of mitigated risks on power supply. So you've seen recently that we've executed a 10-year PPA for at very competitive prices, which locks in a big chunk of our operating costs. Access to port is obviously or can be a risk globally. So we have secured access to the port for our inbound logistics and also outbound for our product. There are many other material project documents, which are the main equipment packages, which have all been successfully executed over the course of 2022. And also the permitting being valid and no breaches of any social or environmental legislation, which is all on track. And that, with the final piece, which was the cost to complete exercise that we have recently undertaken, which essentially looks forward to the required capital to meet all of your pre-production operating costs, your interest payments over the period before you're cash flow positive, as well as any shortfall on the capex budget. And that was satisfied by the recent fundraise that we executed in Q4. So following that, all of the CPs were satisfied, and we went through the first draw process last month, which is a very good milestone for the company, because you essentially have to go through a revised credit process. It goes back to the credit committees. There's an updated model, and the project has been de-risked enough for the senior lenders to start the senior debt process of funding the project.
No, thanks for that, Simon. Next question is around global inflation, and the question is, it's been obviously tracking high. So I was surprised that the fundraise came along without much warning. Did any particular cost surprise and quickly? So I think, look, on that, we obviously built up our overall project capex costs in Q2 2021. we obviously approved the project in January this year. When we closed out those original project costings, we didn't see the inflationary environment that then unfolded over the next 8 to 12 months. So when we approved the project, inflation was already starting to drive hard, and then we saw rates kind of ride up to around 12% in Brazil. So we hadn't got those factored in our models, and outside of that sort of Brazilian inflation, we also saw a massive step up in industrial activity in Brazil post-COVID, which meant all contractors were extremely busy, which meant they were just building margin into their pricing because they could, coupled with the fact that they weren't able to get surety on input costs, i.e. steel prices, labor prices, fuel prices were all moving around. So they were just added in as a risk premium. And we saw individual cost centers like concrete increase 300% over an 8-month period. So we really had no way of factoring those into the original capital costs. So why did it happen so quickly? And that's a function of the speed that a number of contracts went out and were awarded during the mid part of the year. So we were effectively on budget in Q1 and into Q2. And then as we ran into late Q2, Q3, where we were awarding a significant number of contracts with this kind of inflationary package built in, that's where, as we ran through the cost to complete tests, obviously that funding gap appeared. So that's a function of how that was. I think if you look back overall, we've ended up about 12.5% over our original budget, which in the inflationary environment that we've seen, we think is a pretty good outcome. We've seen a number of mining projects that are 50, 60, 70% above the original budget. Next question is, perhaps Simon, this is one for you. What's the chance, if you're a betting man, what's the chance of another fundraise before 2024?
Look, we're fully funded as it stands. As we've mentioned over the last couple of questions, the cost to complete exercise was looking not only at the capital costs, but also the total cash flow required to get us through to being cash flow positive. So you have your pre-production interest rates that obviously has been rebased upwards on the forward curve. We've also got the pre-production operating costs, which include a reasonable amount of coal. That's obviously gone up significantly since we did the original modelling. So all of these items have been included into the revised budget and model and the equity that we have recently raised. So there are obviously situations that are outside of our control that could cause a requirement for further funding, significant delays in the supply chain, issues with shipping, etc. But we think we have been pretty prudent in our modelling, and we have approximately $60 million of combined cost overrun facility and contingency remaining, which as a percentage of the capex still to commit and the overall capex is actually a more prudent position than we started the project back at the end of 2021. So the contingency and cost overrun facility that we're carrying is essentially for execution issues or any delays that come out during that process.
Okay, thank you for that, Simon. Next question. You touched on nickel supply demand fundamentals. Do we see nickel prices maintaining current levels in H1 23? So look, obviously we're sort of in the 28, 29, 30 range currently. We talked earlier in the presentation about the sort of robust position around the EV market globally. I think our view is, look, obviously we have seen a highly volatile price environment during the course of this year, but we overall have seen the cost of nickel increase across all of the areas. And we've seen, for example, if we look at Indonesia, 18 months ago, their C1 cash cost was sort of $7,500 a ton, whereas this year you're closer to $13,000 a ton. So input costs have gone up. I think the reality is probably high teens, early 20s is probably a realistic place, the nickel price in the midterm. But I think what we look at is we focus on our cost base, and that's where things like this low-cost power contract are so important. We are aiming that our C1 cash cost is sub $7,000 a ton, which puts you firmly in the lower quartile. So Araguaia has always been designed to run at low nickel price range, so we can ensure that we generate robust returns in a low cost environment. Obviously, any upside in nickel pricing is just upside for the business. Next question is, Araguaia is currently going through an intense period of construction. How about availability of local contractors? And so far, how is the rainy season impacting construction? We did touch on this a little bit earlier. I think, look, we're in the Carajás sort of arena, which means that there is a lot of skilled people, skilled contractors within the immediate vicinity of the project. So we're not having challenges finding the right skills and people. As I alluded to, we're about 8 weeks into the wet season. It did start a little bit later this year, but it has been fairly intense. And we spent a lot of time during Q2 and Q3 really ensuring that the site was prepared for the wet season. So that was upgrading the 43 kilometers of road into site so that we can ensure we can have crew shift changes traveling at 60 kilometers an hour and a 1 hour trip into site. We've done a lot of work on site drainage, and overall we've been able to maintain productivity levels so far into the wet season. Now, obviously, we need to see how it plays out in January and February, but so far so good. Next one, I think for you, Simon. Helicon Investments, now a significant shareholder with over 8%. Did they participate in the recent raise, and the same for Asvalor?
Yes, we had significant support from the market, including Helicon, who participated in the raise. They've also been buying in the market recently, increasing their positions through TR1s.
Okay. And I think just to add to that, look, they're both very supportive institutional long-term shareholders alongside those three strategic shareholders, Glencore, La Mancha and Orion. So the business today has some very good support in the market alongside obviously all of the retail and additional funds that we have in the register. Going down here, there's a question: have you had contact from the new Lula government? I think, look, a lot of the agencies that we work with, whether it's the Mines Department, the Environmental Agency, all the technical teams have remained the same through the change of government. So far, we're not seeing any change to our business activity in Brazil. There's a question here: looking ahead, taking into account the strong cash flow forecast, do you envisage HZM will be paying dividends, and when? Maybe one for you there, Simon.
Yeah, thanks. It's too early to say exactly when we would look to pay dividends. It really does depend on the nickel price at the point in time that we enter into production. It's very easy to look at forecasts and the current nickel price environment, but the proof will actually be when we're in sustained production and the cash flows that arise out of line one. We will also, as we've mentioned a couple of times, look to reinvest those cash flows into building out line two to double production. That should be a quicker and lower cost route because of the shared infrastructure and the fact that we're already present on site. And at the same time, there could be a refinancing of the debt facilities, which would free up some capital for line two. All of those things will have to be looked at the time to then determine when is the optimum time to start paying a dividend. But the strategy of the group is to build out nickel production to make this a globally significant nickel producer, and with that, strong cash flows, which we would then look to distribute where appropriate.
Another question here that says, are you able to share an updated feasibility study NPV count with the updated cost and increased nickel price? It's difficult for us. We're not able to produce an updated feasibility study. Obviously, we move beyond the feasibility study for Araguaia. But actually, if you look at the current presentation, we have included the Araguaia NPV for today's nickel price, and it's around $2 billion. We did used to have an NPV calculator up on the website, but due to the TSX regulation, we had to take that down, and also it ran out of range when I think we went over $28,000 a ton nickel. But we do try and update in our presentations what the NPV is with current spot. I think last question here is how large a discount to market is the offtake contract being priced at? I think Simon, do you want to talk to that?
Yeah, it's a fairly vanilla offtake that we have with Glencore. As we touched upon, the main criteria was the duration, that it covered the 10-year period over the senior debt facility, and that it was take or pay from a creditworthy counterparty. It is a marketing arrangement with a 1.1% fee, so that there is no fixed pricing mechanism built into that.
And that was a whole driver. We obviously want to ensure we're getting maximum upside to nickel price. So I think that brings us to the end of questions. I think we've managed to answer most of those. So that brings us to the end of our Q4 update. I would really just like to wrap up by obviously saying, look, it's been a long, challenging but positive year for the business. Obviously, there's been massive steps forwards in terms of mobilizing to site. You've seen the kind of developments that are going on site. Obviously, we've had challenges with the global market inflation, the fact that obviously we had to raise additional capital that wasn't part of our plan, and that's always a challenging situation to be in. But I think the strength of that fundraise and the strength of the shareholders that we now have on the register is a credit to the asset of the business. And I think looking forwards over the next 12 months, again, a lot of milestones to look forward to. Obviously, as Araguaia moves through to cold commissioning at the end of next year and first nickel in 2024, you're going to see developments on line 2 at Araguaia. You're going to see developments on the feasibility study at Vermelho. And all of this is designed to take Horizonte from the exploration company that it started out as to becoming a 60,000 ton a year leading global nickel producer. And we've got all the right assets to achieve that. We've got a very strong nickel market, and there are very few high quality scalable assets that are ready to construct in the marketplace. So we believe you as shareholders should see significant upside as we de-risk and start to deliver our goals as we become a producer. So I'd like to thank you all very much for your support. Have a very happy Christmas, and look forward to updating you in 2023. Thank you very much.
Thank you.
Jeremy, Simon, that's great. And thank you very much indeed for your presentation and for addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended for you to review, to then add any additional responses, of course, where it's appropriate to do so. Jeremy, I was just going to ask you for a few closing comments, but I think you well deliver those, sir. So if it's okay with you, what I'll do now is I'll redirect those on the call for their feedback, which I know is particularly important to yourself and the company. So could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Horizonte Minerals PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.